Hello and welcome to AI Market News by LM. We're seeing US markets just absolutely charge ahead, right? A really strong multi-day comeback just before the Thanksgiving holiday. But what in the world is fueling all this optimism, especially when you've got new risks popping up on the global stage? Well, it all boils down to a massive bet investors are placing on the Federal Reserve. So let's break this down. So yeah, why the sudden bull run? I mean, what's going on? Well, this entire rally, and I mean all of it, is pretty much built on this one core belief: that the Federal Reserve is finally done with its rate hikes and is about to pivot. A big change, of course.
Right, so what's the big change? What's giving investors all this confidence that a rate cut is literally just around the corner? Maybe even next month.
Okay, so a few really key things have happened that have just totally flipped the script. I mean, we're seeing huge players like JP Morgan completely reverse their forecast. They're now calling for a cut as early as December. That is a massive signal, and it looks like the market totally agrees. Futures are now pricing in an 80% chance of a cut. And listen, this isn't just guesswork. It's backed by actual data that's pointing to the US labor market finally starting to cool down, which is exactly the green light the Fed's been waiting for. In this quote, it just perfectly captures the tightrope the Fed is walking. You know, for months and months, it was all about one thing: fighting that stubborn, sticky inflation. But now, the other half of their job, their dual mandate, is starting to flash some serious warning signs. We're talking about employment and just overall spending conditions. And that weakness is getting, well, pretty hard to ignore.
Okay, so how is all this optimism actually playing out in the markets? Well, we're seeing it ripple across pretty much all asset classes. It's creating what we call a classic risk-on environment. You know, that's when investors feel a bit more adventurous and are willing to buy into more speculative stuff.
So if we take a look at the US index futures, the moves aren't huge, but they are all in the green. And that tells us that this bullish feeling is holding on. Yeah, the pace is slowing down a little bit as we head into the holiday, but that upward trend, it's still there. Now, let's switch gears to currencies and crypto for a second. While the big forex pairs, the euro dollar, the dollar yen, they're staying pretty stable, we are seeing a real surge in some of the riskier assets. Case in point, Bitcoin. That's often a huge tell for market confidence. It's showing us that investors are ready to get back in the game.
And yeah, look at that. Bitcoin has climbed back above the $91,000 mark. That's a really strong recovery, and it's moving right in lockstep with that broader risk-on feeling. It's a clear sign that people are willing to move back into those more speculative plays, basically betting that the worst of the Fed's tightening is over.
And this is interesting. This chart shows us the rally has what we call strong breadth, and that is a really healthy sign. What it means is it's not just a handful of giant tech stocks doing all the heavy lifting. Nope, with almost 2/3 of all stocks moving up, the gains are spread out all over the place. And that suggests this rally could actually have some legs.
But, and this is a big but, while everything looks rosy in the US market, there's a very different and honestly a pretty worrying story unfolding over in China's economy.
The biggest concern, really, is centered on China's super fragile property sector. There's a company over there that was once considered a rock-solid giant, and now, well, now it's sending out some major distress signals.
The company we're talking about is China Vanke. Now, this was supposed to be one of the safe ones, right? A developer that had managed to dodge all the defaults that took down its rivals. But now, even Vanke is in deep trouble. They're actually trying to delay a bond payment for the first time ever. Their international bonds are just tanking, and trading in their local bonds had to be temporarily stopped. I mean, these are all just massive flashing red flags. And this commentary just nails it. This whole development was a real shock to the market. Vanke was supposed to be the survivor, the one that made it through the storm that sank giants like Evergrande. So the fact that it's struggling now, it makes everyone wonder just how deep and how wide this property crisis really is. And it's not just about property either. The tech scenes in the US and China are also moving in completely opposite directions. Over in the US, tech is on fire, leading the market rally, all thanks to AI hype and solid earnings. But in China, major companies like Alibaba and Baidu are facing brand new geopolitical problems. There are reports that the Pentagon wants to put them on a watch list because of supposed links to the military. That's a whole other can of worms. So what we're left with is this really fascinating split screen, right? On one side, you have this super bullish story in the US, and on the other, you have these really significant risks brewing globally. Now, if we take a peek at the economic calendar on investing.com, today is pretty quiet here in the US. It's the Thanksgiving holiday week after all, so that gives the market a little bit of a breather, but you can bet that everyone is going to be watching that next round of economic data like a hawk. So these are really the key questions that are probably going to drive the market for the next few weeks. I mean, will the US labor data keep showing that weakness the Fed is looking for? Can Beijing actually contain the fallout from this Vanke mess? And how is this whole Pentagon watch list thing going to affect how investors feel about Chinese tech? A lot to keep an eye on.
And all of this leaves us with one really critical question as we head towards the end of the year. Is this risk-on rally we're seeing built on a solid foundation, or is it kind of just ignoring the cracks that are starting to show up in other parts of the world?
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching. Don't forget to like and subscribe.